Welcome back to Game Trader Live. This is a show here on Twitch that happens once a month on the Shacknews channel, where I talk about stock market events, I look at stock charts, and I give my opinion on valuations of companies, where I think things are going, why I think things are going where they're going. And obviously we focus on video games and tech here at Shacknews, so we'll talk about Nvidia and Apple and Nintendo, but we're also going to talk about the broader market. So I would like to get into that first. There you go. Oh, I got Chewy up here. I was looking at Chewy last night. Just an interesting chart. Above 39. Sorry, I move this a little bit. There you go. Hopefully you hear me better. Above 39.10, there's a buy signal. Because basically it's been inside quarter. It went slightly up. It tried to reverse back in. It didn't. And now it's breaking out of that previous range. This is what they call a mother bar here in technical analysis. So it looks like a bottoming process is playing out in Chewy. Obviously, this is not our core competency here, so I'm going to go talk about the markets now. But, yeah, I was looking at Chewy last night. Keith Gill, the famous activist investor in GameStop, owns like 9% of Chewy now. But yeah, we're talking about the month. This is the first month of the year that just ended, and we have an outside month in January. That means that January's high was above December's high. January's low was below December's low. So that means we have an instant new broadening formation. There's your downtrend. There's your uptrend. So one of, I guess, four things could happen. The S&P 500 could break below the low, and that would be a sell signal. It would be an outside bar and down sell signal. It could break above the high, and that would be an outside bar and up buy signal. It could stay inside of that. That would be an inside bar. Or it could go outside again. So those are your options. Stay tuned. But those are your levels to watch. A break below 575.35 on the SPY ETF would be a sell signal, and a breakout above 610.78 per share on the ETF would be a buy signal. Those would also serve as your stop prices. If it goes back within this range, to get out of your short or your long. But yeah, the S&P had a pretty volatile month, and it looks like that might continue. Let's look at the Dow. The Dow did not have an outside month. It tried to break down below it, came back back inside of it. It's not really giving us much of a signal there. We can look at still inside quarter. Let's look at the SPY on the quarter too. SPY is not inside quarter. It hit a new all-time high earlier this month. Let's see if I can find it on the weekly chart. Yeah, last week it hit an all-time high, and then it had a rough week this week. So yeah, we're not seeing the same behavior from all of the indexes. So I think that's something interesting to note. Let's see. The other index of note is the NASDAQ 100, which had a shooter month going into the end of the year. It traded down below it, so you did have a sell signal for like 2 days earlier this week, or last week, or it was this week. But it rallied back inside of that previous month's range. On the quarterly chart, it's still cooking an inside quarter. So you'd have to have a break below 477.40 for it to really sell off, or a break above 539.15 for the NASDAQ 100 to rally materially. And we'll get into the components of the NASDAQ 100. But yeah, it's still inside year. Let's look at... I know I'm looking at some longer term charts, but if you watched last episode, we were talking about the macro charts, so I think it's important to look at that. Yeah, SPY is not inside year. NASDAQ is, and the Dow Jones is. So one of two things are going to happen. Either all of these are about to go down together, or the NASDAQ is leading, or sorry, the NASDAQ and the Dow are lagging the S&P 500 right now. And maybe the S&P 500 is trying to tell us something. So yeah, these are yearly charts though, so that they're not going to really help us. I'm focused on the month here. The last index that I like to look at is the IWM. This is the small cap Russell 2000 index fund. This is actually a RevStrat month cooking now. So you had an inside month in December, right? You traded inside of November's range in December. We traded below that this month, only to close back inside of it. So a buy signal in the IWM would take place above 230.32 per share. And then you would know that it's failing if it breaks down back below 213.97. Those are the indexes. I think the most important sector, and I think it's kind of funny, I mentioned it last episode, is the semiconductor holdings ETF. We had an inside month followed by an outside month. But as you can see here, it's really been doing a whole lot of nothing for months. And that'll show up on other charts. Like you look at the quarterly chart, inside month, or sorry, yeah, inside quarter followed by an outside quarter. This quarter's not over, so we won't have a signal until the end of March. But I shouldn't say that. If it drops below, because this is still active, if it drops below 234.17, you would have a sell signal on the entire semiconductor industry. On the monthly chart, that's the same price, 232.24. So you would have a monthly sell signal and a quarterly sell signal. Sorry, the break would be below, yeah, 232 and 24 cents. That was the low of January for the semiconductor industry. And just, I like to zoom out, give people some perspective. The semiconductor industry had an amazing year last year, and it's trading inside of that year. So maybe it's going to continue to turn around there. We'll have to wait and see. But that's not great. If it doesn't break out to the high, you could have dead money on your hands. And we'll get in, I'll get into the individual equities in the semiconductor industry now. ARM Holdings actually had a decent month. Inside quarter actually cooking up a RevStrat right now, but you have a buy signal in ARM Holdings on the quarter above 164 and 16 cents. It closed this month. It just closed at 159.58. So it's definitely closer to taking out that high. It did it during the quarter, or during the month. The monthly chart looks a little more messy, as most semiconductors will. And yeah, it's trading inside year still. So if you really want... I got a question from the chat here. Sam asks, when you speak of sell signals, does that mean a trader would be actively watching second by second, or simply put in an auto sell when it hits X value? That's a good question. So when let me find a good example. It's a function of what time frame we're looking at it on, Sam. So I tend to look at longer term charts. But yes, when I speak about sell signals and buy signals and technical analysis, I am speaking from the perspective of a trader, not necessarily an investor. I do use charts to help time the purchases of my investments, but I am speaking from a trading perspective, and yes, an active trader would be watching their positions intraday at the very least. So, from 9:30 a.m. Eastern to 4 p.m. Eastern, you're going to have one eye on what your trades are. So yeah, you do have to keep an eye on that. But you could also do it, like you said, with limit orders. So in the case of ARM, right, you could say, okay, if this stock gets above 164.16, I'm going to do a buy limit order at that price. And then if that executes, I'm going to do a stop loss order at that price. So that's how you would mitigate your risk. That's how you would take advantage of it. But yeah, I do recommend people who trade, definitely pay attention to your trade. Don't walk away from your trade and expect it to just work. Conversely, if you're looking for timing and investment, I think technical analysis can help with that too. And that's why I tend to look at these longer term charts, quarterly or monthly. Because if I have a signal, like if it does get above 164.16 and it stays up there, that buy signal is going to last the entire quarter. So that's going to last all of February and all of March before it runs its course. So that's like a 2-month buy signal. So that's not, while that might not be a long-term investment, 2 months is an epic amount of time when it comes to trading. I've said it on past episodes, but I will continue to hammer this home. 90% of the trading volume on all the markets is done by algorithmic trading, high-frequency algorithmic trading, where these computers plug directly into the NASDAQ and the NYSE, and they have a few millisecond advantage when it comes to price discovery. So in lieu of that, you have to be mindful of the rules that the computers are using. And I believe that this technical analysis strategy that was taught by Rob Smith, I believe it best approximates how the algorithms think. Because it's really based on a few things. It's based on price equilibrium. That's what, when you hear me talk about an inside whatever, this is a good example of that. ARM Holdings last quarter tried to stay inside of the previous quarter. It was trying to find price equilibrium. And then it broke the price equilibrium to the upside, only to come back with inside that. So that break of the equilibrium is what we're looking for. And we're looking for it on any time frame. And we're looking for it to cascade. So it's like, okay, you can do technical analysis like this all the way down to a 1-minute time period. But then, like, you're only going to have useful information for the next minute. So it's like, I wouldn't recommend using minute bar charts. I've seen people trade on 5-minute bar charts. I've seen them trade on 15-minute. People trade on 30s and 60s, daily charts. What I look for is like a confluence of bullish signals or a confluence of negative signals. But yeah, so that's ARM Holdings. I think I gave everyone the price to pay attention to there. Another semiconductor stock that's just been brutally beaten down since hitting an all-time high last year is AMD. It was $227.30 in March of last year. It's currently sitting at $116. So that's just ugly. This is one of the worst looking semiconductor stocks outside of Intel that I follow. So yeah, it couldn't even stay inside. It's not staying inside quarter. So you have an active sell signal. Yeah, this is real bad. This is a inside year, right? So 2 years ago, it traded inside. So sorry, 2023, it traded inside of the range of 2022. 2024, it broke out above that, only to close back inside of that range. And then this year, it started off by breaking below that low. This is called a rev strat to the downside. This is a sell signal, and it's valid the entire year if the stock stays below 90 cents. So that would be your entry point at which to short. So it closed today at 116, or it's trading at 116.02. That is actually below the sell signal price. So this would be a stock that on down days you could probably chop wood at if you're a trader. You can use, so because we know that the macro trend is a yearly sell signal, we can look for shorter term sell signals, right? You can look at the daily chart or the weekly chart or the monthly chart to inform your trades. But I do think that AMD is a stock that if it continues its weakness, you can keep beating up on it. Yeah, it sold off with the rest of tech earlier this week on the fears of DeepSeek and all that stuff, because they do sell server chips, and they sell AI chips over at AMD. Obviously, NVIDIA is like the leader in that space, but AMD is kind of like number two. Oh, my green tea is that perfect temperature. Anyway, that's another semiconductor I think we should be paying attention to. Let's see what else. I'm kind of jumping around because I want to talk semis first. I think the semiconductor industry is basically like the oil industry. It's the like back in the 2000s, like where they're just these. It's an oligopoly. It's like an oligarchy or whatever you want to call it. But it's like it's like feast or famine right now in the semiconductor industry. And for the most part, they were feasting. AMD obviously it's down almost. I think it's down 50% from its all-time high. Maybe at some point AMD becomes interesting from the long side, but as I was telling people earlier this week who were asking me if they should buy the dip, I was like, don't be a hero, especially in the semiconductor industry, and especially in a stock like AMD, because we have technical reasons to avoid it. And once again, just to remind people, the sell signal for the year is active below 117.9 per share. So it's active right now. I don't see any short-term sell signals, but you do have that yearly in effect. And it tried... Oh, that's not the right... no one's looking at a 9-day chart. It did not stay inside month. So you could use the low of the month as another place to initiate a short if you wanted to. But yeah, let's move on to Intel. Woof. This is the worst semiconductor chart. I try to point it out every episode. It's the one semi that I followed that did not hit its all-time high from the year 2000. It got slightly lower than that, and now it's down about $50 from its 2020 highs. They report earnings that they were slightly better than expected, but they did guide for worse revenue. And they're planning to do a foundry spinoff. They're going to... Intel's really a mess right now, man. Like, they were the leaders in at least CPU. They had a decent position in the cloud space. It's like they made every single investment they could have made and every single decision they could have made in the last 10 years, I think has been wrong. And they missed out on a lot of the smartphone revolution, the iPads, all that stuff. Apple ditched them for Mac. AMD makes a competitive processor now. And Apple makes their own processors now. Like, NVIDIA has kind of supplanted them when it comes to cloud. So it's... And yeah, they've missed every major trend. They missed the AI. They're missing the AI trend. And they missed all this, like, all the mobile devices. They didn't have a compelling mobile chip when the smartphone revolution took place, and that's why this stock is where it is. A lot of people think it's a value play because, you know, on the surface, you can look at its financials and be like, oh, you know, it's not that expensive. But, like, why I'm using the term value trap is it's something that appears to be cheap, but isn't. So, you know, when we're looking at Intel, I'm pulling up the Yahoo quote for it. It's an $86 billion company. It's trading at 88 times trailing earnings. This is fundamental analysis, mind you. And 25 times forward earnings. So they're expected to make money, and they're trading at a pretty high premium to their earnings. I think the interesting part here is Intel is a technology company trading at a discount to its book value. It's trading at 0.87 times book value, which means that Wall Street and investors think that there's more pain to come. Otherwise, there's no reason that they should be trading this low. And that's why I'm like, yeah, you can see some statistics on when you look at it fundamentally that make you think, hey, maybe this company isn't going to die. But if their best idea is to divest their foundry business, I'm not sure. I want to know what this company looks like after it's restructuring before I commit a dollar to it. So I think Intel's a very interesting case because there are fundamental reasons where if you look at it and you're an optimist, maybe you could see some value there. But I just, why buy a company that's struggling so mightily when you could invest in a company that's actually making money? You know what I'm saying? So yeah, Intel's definitely the odd stock out in the semis. But, you know, this week, all the semis got hit. So it's not, their problems are not just, their problems are unique to Intel, but the whole industry is kind of facing headwinds now after years of tailwinds. Marvell's doing pretty well. Had a weird month, though. We don't really talk about them too much. Let's talk about Nvidia. Woof. So Nvidia is not trading inside year. It hit a new all-time high of 153.13 in January, and it's selling off. It's still selling off. It's an outside month to the downside, so you had a sell signal below 126.86. It's currently trading at 119.78, but the month just ended. So now you're going to have to use this month's low as a guide for if you want to continue to short this stock, if you're a trader. That would be below 116.25. I think at some point Nvidia is going to be a buy, but if you look at its long-term run that it's had, even just in the last 2 years, there's a lot of people who are going to want to protect their gains. So it wouldn't surprise me to see the stock drop below 100 here in the near future, especially with all this talk of tariffs and whatnot out of our very incompetent administration. I'll get to that when we talk about Tesla. Qualcomm actually had a pretty sweet month. Their stock's doing well. Inside quarter still. Inside year. Did not set up a reversal strat to the downside. So you have a very wide range that this could trade in all year long. I think they're an interesting company. They're fabless. They license most of their tech out. And I think that's an interesting business model to have right now. Let's see. Taiwan Semiconductor. Not inside year. Outside month. It was up on the month, but you have an outside month, so which means you have a brand new broadening formation. So you would look to take out 226.40 to the highs. That would be a buy signal in TSM, and a sell signal in TSM would occur below 187.66, and that would be valid throughout the entire the month of February, basically, if the buy signal or the sell signal hits. Hey, thanks for the follow, Texacantina. AMD will get a nice boost off of video card news. Sure, at some point. Because, NVIDIA already kind of showed their hand with the 5090, so now AMD knows what the cost or what the price of the 5090 is going to be. And, I think AMD's always been I'm not saying they're a budget company, but I think they've always offered more reasonable prices for PC parts. Some of their stuff's expensive, but we'll have to wait and see. I think the other thing that's concerning about all semiconductors is that there are tariffs being implemented this weekend in China, where a lot of semiconductors are made, and there's still a lot of regulatory uncertainty around what's going to happen with the CHIP Act money, that was supposed to be bringing in funding, for factories in America. We're not sure where that's going right now. Some CEOs have said that it's still on track. Some have said we're not sure. So I think that is a concern. And then, I always say this, but Taiwan is a concern. The sovereignty of the country of Taiwan China's relationship with Taiwan, America's relationship with Taiwan, I think is a major risk to the broader equity market that people need to pay attention to. So that applies to all these semiconductor companies, because most of them are working with Taiwan Semi or Samsung when it comes to fabricating their chips. But yeah, no, I get that. Texas Cantina, if you want to do a quick trade in AMD, just know just know that you're in a down year. So if it's still below this 117.90 price point, know that you're going against the yearly signal if you're buying it from a long side. But that doesn't mean you can't do it. But it's like you said, be quick with it. I don't know if I would be able to sleep well if I had a lot of AMD in my portfolio overnight. But if you're someone who's day trading, I think there will be opportunities in AMD for sure. But yeah, good point. Let's see, what other chip stocks should we look at? I think that's most of the ones I pay attention to.
Okay, I found this on the web for what our chip stocks should we look at. Check it out.
I hate you so much, Siri. Yeah, it doesn't sound good. God, you're terrible. I didn't even say Siri. Like, why did Siri trigger there? Can anyone explain why Siri just triggered there? I've said Siri like 5 times since Siri triggered, and Siri has not responded to a single time I've said Siri. But now, the one time I don't say it, she gave me a link to some Seeking Alpha article about semiconductors. Thanks for nothing. Anyway, I digress. Yeah, so this is semis I wanted to highlight. We'll talk a little bit more in depth about Nvidia here in a second. But we had earnings this week, so let's talk about some of the companies that reported earnings. Apple was out with earnings, and it had a really interesting day. That's not a good-looking bar. It opened on its highs and it sold off basically all day. That's an outside bar to the downside. So you would use today's low as a sell signal on Monday. So if it breaks down below 233.44 cents, that would be a sell signal in Apple. The week is still green. Month is not green, but it's trying to get inside of last month's range. It is not inside quarter. It dipped slightly below last quarter's low. So we did have a brief moment where you could sell Apple. It's trading inside year. So really no technical reason outside of this daily chart, which does not look good. But like I said, it's conflicting. You have an inside year, you have an up week, you have a down day. But if we're talking about the fundamentals of the company, Apple just reported a decline in iPhone revenue during their Christmas quarter. They missed by like $2 billion. It was like $69 billion versus $71 expected. That's their biggest product. It's where a lot of their margins come from. They also reported 46.9% gross margins, which is like insanely high. It's the highest they've ever had. So you're talking about Apple coming off of peak margins with a product that is slowing down. And if you look at their other initiatives recently, Apple Intelligence is not that good at all. And Apple Vision Pro is so bad that there's rumors they've stopped producing it entirely. And they basically act like it doesn't exist. They haven't said the words Apple Vision Pro at an Apple event in like almost a year. I think it's been about a year since the product launched. And we don't know about unit sales. Apple barely provided any software support for the device. It seems like Tim Cook's biggest failure, honestly. That being said, if this stock market's going higher, I think Apple can go higher with it. This is not me saying buy Apple. It's more just, I probably wouldn't sell it here, just given the environment we're in broadly. Basically, I think the stock will trade for a 50 PE, and it's currently trading at 32. So if we just do some back of the envelope math, stock's currently at 235. We're going to back out this 32 PE, multiply it by 50. So my target previously was 323. Based on expectations for this year, I think 367 would be my upside target, but I'm going to just stick with 323 because that was my call from last year. And then if it gets to 323, I'm not going to have an opinion on it. But it's like, it does seem like we're in this environment where these multi-trillion-dollar companies are all going to become even bigger. So it's hard to bet against Apple. You know, they spent $23 billion buying back their stock in the quarter. That's like bigger than most companies. They spend that on share buybacks. So they're able to manufacture earnings per share growth, which isn't great, but they are doing it at a time where their overall revenues are also slowing. So I wouldn't bet against Apple, but if the market is going higher, Apple's in everything. It's in your retirement account probably. If you own a growth fund or a value fund, if you own the S&P, or if you own the Nasdaq 100, or if you own the Dow Jones, Apple's in all of those things. Apple's in the XLK. It's the tech spider. It's everywhere, and it's $3.6 trillion market cap. So it's like it's going to be around for a long time, and that doesn't mean the stock can't drop by 50%. I think that could happen because there are some headwinds. I don't think they're making the best products anymore. Some of their products I think are coasting on just being good, the Macintosh and the iPhone, but some of the decisions they're making on the software side on both those platforms are concerning to me. But yeah, they beat 124 billion in revenue, and they beat on earnings largely because they buy back their stock. Let's see, who else reported this week? We talked about Intel already. Intel reported this week. IBM reported. Excuse me. IBM beat. It had its best, I think it was its best trading day in like 15 years or something. It was up 13% on earnings. They beat on the top and bottom line. Interesting company. They're really not the same company that people think they are. Yeah, Apple is leaning in on chip stuff, Texas Canteen, I agree. And that's honestly some of the best stuff they do is the M series chips and the advancements they're making there. I recently got a MacBook Pro, and I absolutely love it. It's one of the best computers I've ever owned. It's expensive, you have to pay that Apple premium, and like they act like they have to go mine the solid state drives themselves the way they price your storage upgrades. Yeah, IBM had a beat. Yeah, I mean, they have the A-series chips for the phones, and I'm sure there's some battery considerations that have led to that. But we are seeing M chips in iPads already, to your point. But like, it's just kind of boring, man. Like Apple used to be this company that was like, we're gonna wow you with a new product category that no one's thought of, right? Or at least a new take on a product category. And now it just seems like they're chasing trends. They're no longer the trendsetter. They're chasing trends. And it like pains me to say this, but like Facebook's more innovative than Apple. Yeah. Yeah, Axeman says, I for one welcome the era of video cards being for video again. Dude, yeah, yes and no, but I'm just down for I just want video cards to be somewhat affordable again and maybe fit in my freaking case. I'm going to have to buy a new case if I buy one of those 5090s. They're chunky boys. But yeah, it's definitely an interesting time for the semiconductor industry. And a lot of uncertainty. So I'm actually scheduling some tweets while I'm here. Doing my other job while I'm at my other job. Doing my job. So yeah. IBM out there. Had a solid quarter. That's right. Facebook reported. Facebook reported a beat on revenue and earnings, and then on the conference call, Zuck did reaffirm that they plan on spending $65 billion on R&D for AI this year. So this whole the DeepSync thing that scared everyone, or DeepSeek, sorry, that scared everyone earlier this week, which is actually news from December. So there might have just been a rotational trade going on in the semiconductor industry. But yeah, the word about DeepSeek's abilities, or what you can do with DeepSeek, it kind of shook the entire semiconductor industry earlier this week. But on the conference calls for Meta and Microsoft, both companies reaffirmed that they're going to keep investing. And then there's a story that SoftBank is looking to invest an additional $25 billion into OpenAI, and that the valuation for OpenAI is around $350 billion. So while DeepSeek may be an innovation, it may be different than what other companies are doing in the AI space, I found it amusing that, like, they were still using NVIDIA GPUs, and the company, OpenAI, whose LLM they trained a lot of DeepSeek's data on, they used NVIDIA's H100s and H200s to train that model. So everyone's like, oh no, sell NVIDIA. And I'm like, wait a second. This is, once again, all roads go to NVIDIA. All roads lead to NVIDIA. And if we are just going to have video cards for video again, that's also good for NVIDIA. But some of this is priced into the stock, right? There's a... I'm going to jump to NVIDIA. This last year or two, I think some of the benefits of AI have been priced into NVIDIA, and maybe it got irrationally exuberant. We'll have to see. Because what I'm seeing is that everyone's orders are still coming into NVIDIA right now. No one has announced that they're going to cut back spending on AI. They're cutting back spending on everything else at their companies, including people, but none of them are cutting back on AI or data center spend. So this might be an opportunity to buy NVIDIA, is what I'm saying. It might not be today. It might not be tomorrow. It might not have been this week. But at some point, people who regretted missing out on NVIDIA are going to get back in this. Because I don't see any evidence that the AI bubble has burst, I guess is my point. But it definitely highlights how risky these stocks are, which is why I have a new fancy graphic. I don't know if you saw on the front page of Shacknews for my show. But on the graphic, we put the words market volatility. That's the theme of today's show, is just to talk about volatility and why I think we are witnessing a lot of volatility. And why it will probably continue for the next few years, if not just this year. But yeah, you got NVIDIA outside month. We already talked about the technical reason. But fundamentally, this was the stock that got beat up more than any other company. It lost $600 billion in market cap in one day. That's pretty crazy. And then just from a fundamental standpoint, all government websites are down right now. Good Lord. Does that mean like IRS.gov is down? IRS.gov is up. Is like WhiteHouse.gov? Is that what you're talking about? No, WhiteHouse.gov is up. Well, let me know which websites you're talking about in the chat. I'm not seeing that on my... I just went to WhiteHouse.gov and I went to IRS.gov, and both of those worked. But I have no doubt, like, earlier this week, the Medicaid websites weren't working. I don't know if they ever got back online. This is what happens. You know what? Fuck it. Let's just talk about it. Tesla. This stock does not trade on fundamentals anymore. And you could argue maybe it never did. But right now, it trades on the fact that Elon Musk controls Donald Trump. Or at least that's what they think. And if this last week or two hasn't shown you anything, it reminds me of when Elon bought Twitter and he just ran into the server room and started unplugging shit. Like offering a buyout to all federal employees and only giving them a 1 week ultimatum for them to figure out what they're going to do with their careers is insane. What just happened, the tragedy in DC, a lot of people in the in airlines or airport security or TSA or national security have come out and said that our air traffic controllers are woefully understaffed. So it's really sad to see how rapidly things are deteriorating in the economy. And at the same time that this Elon Musk stock is up, a little less than it's less than 1% for the month. And it's trading inside month, inside quarter. If you listen to their conference call, which you probably didn't, and kudos to you, I did. Elon basically punted. He said that 2025 is not going to be the best year for Tesla. 2026, 27, and 28, though, which if you've been paying attention to Elon Musk, he's Mr. Promises, and he usually is late on every single thing he says. So the new hype train is that Tesla is a real-world AI company, and that Optimus robot is going to be the biggest thing that they sell. And they're going to begin testing that robot in their factories this year. Whatever. I think that a lot of Tesla shareholders and people who are trading Tesla are Donald Trump and Elon Musk fanboys. I invested in this company in 2012. So I'm kind of stuck. I'm probably not going to sell it, but when you own it down here at less than $2 and it's trading for $400, you take the win. But I almost view owning Tesla as a hedge to living in America. Like, yeah, I think Tesla is like, it's trading on political news more than it is their own fundamental news. And Tesla's Q4 was the slowest growth in revenue that the company has had ever. Slowest year-over-year growth in Q4 ever at the company. Only 2%. So you're paying a high premium for a company that's barely growing sales. And I don't know if, like, people in Germany buy cars, right? And people in Germany have a firm grip on the history of Nazis. And when they saw the gesture that Elon Musk made at that Trump speech, it really, really frightened and angered a lot of people in Germany. And they're not going to buy Teslas anymore. Demand for Teslas is going to fall off a cliff. Yeah, I think but Tesla's not trading on fundamentals, is all I can say. Because that report wasn't that good. It wasn't terrible, but it wasn't that good. And the original reaction to the earnings results were the stock moved down in after hours, and then as Elon hyped up the stock, talking about AI and robots and autonomous driving and rolling out unsupervised full self-driving in Austin, he said all these things, but he's Mr. Promises. We'll see if any of those things actually happen. The one thing I'll say is when you have control of the presidency, when you're Donald Trump's BFF, essentially, I think you're going to get away with murder. Maybe even literally. But at the very least, these corporations are all going to get away with stuff. And I think that's the tailwind underneath the market, is that companies hate regulation. Republicans and Donald Trump historically have been very anti-regulation. So they're gonna take off a lot of the things slowing down these corporations from being even more greedy. So I think that we're set up for a very, very corrupt period of time, not just for government, but for corporations. And the usual suspects will benefit. I have to spell it out. It's Meta, Amazon, Meta's Facebook, Amazon, Google, And definitely Elon Musk companies. Tesla, SpaceX, all those things. I think the other troubling thing is like they're back to their old games where Donald Trump can cause the market to crash whenever he feels like it, and he can let his buddies know before he sends out a post or a tweet or a press release. And we're in this era of insider trading in Washington, and I'm concerned that they can just keep playing games with our equities. Yeah. Anyway, I'm clearly conflicted about Tesla because at a long time ago, I really believed that this company would bring on EVs and that would be a good thing for the environment. I don't think Elon Musk gives a fuck about the environment. I don't think he really cares about cars. I think right now all he cares about is this vengeful attitude he has, but also guaranteeing that he gets to keep test flights of SpaceX going. So yeah, I don't know. It's a good company would check this CEO. A good board of directors would check this CEO. A good company would actually do something when their CEO gives a Nazi salute on a stage with the presidential seal in front of him. A good company would have punished him. This is not a good company. This is just a stock that's going up. That's all it is. And the people who are ignoring all the terrible shit he does, yeah, it just shows you how greedy people are. But yeah, I don't know. I guess we all have to pay attention to what happens to the Tesla brand here. Because I don't want a Tesla. I own 2 Teslas. I've bought 2 Teslas. I actually bought 3, and he's never going to deliver the Roadster. But, and they're actually pretty solid products. They may not be the best cars, but I think they're like iPhone if it was a car. And I think there's a use case for it. I don't drive a lot, so having an EV makes sense for me. But yeah, like if I am to buy a new EV in the future, I will be looking at other options, not Tesla. And that's entirely because of the behavior of the CEO. I kind of disagree, Scanner. Scanner says, I'm kind of assuming that it all ends for Elon when Trump gets tired of him. He seems to be playing a risky game there. I don't think so, man. I think Elon has the receipts for everything that they did during the election. And Elon Musk paid for all of it. Like, Elon Musk, I think he paid something like over $200 million to Trump's campaign. He made something like 200 or 300 billion off of it. Like, he made like some stupid amount of money, hundreds of billion off of that. You could argue that maybe Elon was even involved in the cryptocurrency pump of Trump coin the few days before the inauguration. I think they're closer than people realize. And I think Trump is more of Elon's puppet than Elon being a puppet for Trump. I think the government's largely a puppet for corporations now. And that's why you saw Jeff Bezos at the inauguration with Zuck, and whoever else was there. I am curious though. They're both insufferable douchebags. So like, how long can an Elon Trump partnership last? But who throws who under the bus? That's a great question. But I guess this relationship with Trump and how he behaves on X and the things that he says about disenfranchised groups, the horrible shit that he says about women and minorities and LGBTQ plus people, like, at some point I think all those things are going to come home to roost for the Tesla brand. And cars are nothing without their brands, So yeah, I don't know why the stock's trading where it is. This is the one where, like, honestly, your guess is as good as mine as to where it's going. I don't really have a price target for Tesla. I don't think it should be here. It's up almost 100% since the election. So that kind of tells you why it is where it is. I guess it's kind of like the poster for corruption on Wall Street and in the government and just in the world. Tesla's kind of that now. And yeah, I'm still on Twitter. I follow some of those Twitter Tesla heads, and they say some of the cringiest shit about this guy. It's a cult stock, and it's made a lot of people millionaires just through capital appreciation. So they worship the company, and they think Elon can do no wrong. He can, and he's doing it repeatedly. And I think running the government like he ran Twitter is a terrifying prospect, and we're already seeing horrible results of that. Yeah, this is like, everyone's like, oh, you're talking about politics. It's like, it's impossible not to talk about politics when talking about Tesla, because I think politics have everything to do with why the stock is where it's trading. Anyway, let's talk about a different company. Look at that Nintendo chart, you guys. Guess what hit an all-time high? Guess. Just guess. Guess what hit an all-time high this week? That's right, Nintendo did. Let's zoom out. What if we zoom out? Oh my god, look at that. Look at that chart. This is where I was buying it. And now it's up here. How about that? Wow. Wow. Yeah, there's a lot of hype around Nintendo. Switch 2 details did drop this month. There was a little bit of a sell-off, followed by buying. People seem to be taking the stock up ahead of the Switch 2 launch, but also because they report earnings next week. So, will we see the token Nintendo sandbagged guidance drop? Maybe. The other thing to pay attention to on the yearly chart, we might finally break out above 1651. We closed the week at 1637, but we did get above 1651 this week. We got as high as 1690. Oh, absolutely. Texacantina, I agree. Nintendo's next quarter is going to suck. It's the last Switch quarter ever. And we're talking about Mario and Luigi Brothers ship. And, what the fuck else came out last quarter? Super Mario Party Jamboree. But, like, these are not needle movers. And the Switch itself is so old that the real story here to pay attention to in the next Nintendo quarter is going to be how many Switches did they sell? Did they beat the high score? Because they internally want to beat the DS. They want to sell more than 154 million units of Switch. They gave it a whole year to try it. So we'll see. Realistically, what kind of activity would I like to see with the Switch 2 release? Like, I don't care about this next quarter. This one that they're about to report, I don't think it matters. Their guidance is what matters, because they are going to be providing guidance for the next quarter. But the problem with that is the next quarter, which we're in right now, ends March 31st, 2024. And then 2 days later, Nintendo has a Direct. So they're going to give us 2 more issuances of guidance before announcing any software. So, like, prepare to be sandbagged is my point. You're going to get 2 quarters of sandbag guidance before we even know what games are coming out on Switch 2. So, like, right now, to me, it's like we're in a information vacuum. We don't have any information about Switch 2, really. We've seen some pictures. We saw that video. We saw the Joy-Cons are better. It has some button, you know, and it can act like a mouse or something. But we haven't seen a single game yet. So for me, as someone who owns a lot of Nintendo stock, I'm being cautious here. I'm not adding anything to it. But I'm not making a selling decision either. I need to know more about the product. And I think that's what's happening in this market. So it's like, if Nintendo dips next week, it'll probably be bought because we still are in this news vacuum. And until we know if the Switch 2 is good or bad, it's not going to matter. There's going to be people speculating in the stock. But the other question I have about Nintendo comes down to valuation. This is what I have been I guess, internally in my own brain debating this. Is it possible that Nintendo stock is being re-rated? Is it possible that Nintendo stock is being re-rated? Wall Street is finally not looking at Nintendo like it's a cyclical product company. They're looking at it as a brand company and as one that has recurring revenues. That one is diversifying their revenue stream. Amusement parks, movies, all these things they're doing. Is that going to lead to a re-rating of the stock? The reason I mention that is that's what happened at Apple. Apple used to be a product-driven company, and now their second largest division is services. Nintendo, mobile IP and licensing related revenue is still only their third biggest segment. There's hardware, there's software, and then there's IP. That segment's going to continue to grow for the next 10 years. And it's not doing it based on a product cycle. It's doing it like next year we're getting a Mario movie. We're going to get a Zelda movie sometime between now and 2030. They're taking their sweet time to do this, but 20, 30, 40 years from now, I really wonder what percent of revenue at Nintendo is going to come from licensed IP and movies in the future. But at the same time, what's happening at Nintendo on the hardware side, I think this is the most fascinating transition of a system ever for them. They're allowing you to continue on with your Nintendo Switch Online account and all of your eShop purchases. They've essentially turned eShop into Steam, and they've essentially declared Switch is our iPhone. So it's kind of like you own Apple. Like, if we're going to compare it to Apple, and like forget iPod. Maybe this is iPod, but forget iPod. Let's say this is the second iPhone. Apple was trading at $7 when they shipped the second iPhone, the iPhone 3G in 2008. It's currently at $235. I'm not saying the same thing's about to happen here, but Nintendo taking a different approach to their hardware and saying, Sony makes PlayStations, we make Switches. What that means is this is not the last Switch. We're going to get a Switch 3. We'll probably get a Switch 4. We'll probably get a Switch 5. Because this convergence device was revolutionary. So my question, does Nintendo deserve a higher PE ratio now than they did 7-8 years ago? Because for the longest time, Nintendo traded at a 15 PE ratio. Now we're talking about technical analysis here. No, sorry, fundamental analysis. So it's like, is Nintendo going to trade for 30 times earnings going forward? Is that what we're going to allow it? Because if that's the case, I think Nintendo's going to be a good hold throughout this next period. If that's not the case, if it does revert back down below a 20 PE ratio, I'm concerned because the Switch generation was full of so many perfect moments for Nintendo. Breath of the Wild, the timing of Breath of the Wild, the virality of Breath of the Wild, carried the system the first year. Mario Kart 8 Deluxe selling 65 million units. That carried the system. Animal Crossing dropping literally as the world locked down. And Nintendo having a lot of supply of Switches in 2020 when the world needed them. I think all these things have kind of led to a moment where, like, I don't think it's possible for Switch 2 to outperform Switch 1. I don't think Nintendo's going to be as profitable. I don't think that their peak revenues are going to be the same. Which brings me back to that PE ratio. Are people now willing to pay a higher premium for Nintendo because they're less cyclical? Or are people going to get spooked when they find out, hey, it takes longer to make these games now that they're higher resolution. It costs more to make them. That's the question. But I really think there's a debate to be had about how Nintendo's going to be valued going forward. Because, in my opinion, it deserves that 30 PE. It deserves to trade at a similar valuation, apples to apples basis, with like Disney or Apple. I think they deserve to be considered one of those brands. And I think the Mario movie showed that, but also Animal Crossing showed that. Those Zelda banger games showed that. We got Metroid coming out this year. Clearly Donkey Kong is back in the discussion. So I think that Nintendo shareholders need to ask themselves that question. Will Wall Street finally give Nintendo a premium for its brand? Because if that's the case, I think this stock can go higher. If that's not the case, and it reverts back to the old days, this stock could drop like 30% from here, easily. But if it does, I would buy it down there. Like, I don't think that the long-term story here is not over. And I think they've made a lot of really good decisions with Switch 2. It's iterative, right? And like, so many times Nintendo shoves some kind of gimmick into a system and ruins it. I would argue 3D was not necessary for 3DS. It was a gimmick. Wii U, I don't know where to start. Putting the gamepad on the floor and acting like you're playing golf, that was kind of dumb. Innovative, but dumb. So it's like, hey, what if we just listened? Look, some people are going to like 3D. Glasses free. Look, all things being equal, Sam, glasses free 3D is a pretty revolutionary thing. It was a neat thing, but it was not the system seller, right? It didn't sell the system. And then they ultimately made a 2DS. I think the gamepad on the Wii U is a better example of what I'm talking about. And I think they're not doing that. That was the relief I had. Everyone's talking about how they love the 3D on 3DS. I think there were a few games that used it extremely well. Pushmo, Super Mario 3D Land, I think Star Fox 64 3D, Ocarina of Time 3D. Those were all very good ports, very good games. I'm not going to talk shit about them. Also, New Leaf was great, but I didn't play New Leaf with 3DS on, or with the 3D on. My point is, it doesn't look like Switch 2 has some sort of dumb gimmick shoved into it. That doesn't mean they're not going to ship a peripheral that's a dumb gimmick. I think that might be the case, because they have the 2 USB ports. Kirby hate, sir? That's Kirby right there. Kirby, right there, sir. How dare you? How dare you? That right there is Kirby. Kirby hate. How dare you? How dare you, sir? Yeah, Kirby's awesome. Also, Nintendo owns Kirby. In conclusion, Nintendo owns Kirby. You're gonna make me pull up that fucking scene from Smash, aren't you? I'm literally Googling it right now. Here you go. Just a reminder.
Don't let a single one get away.
This is actual. This is real. This actually happened. In case anyone was wondering, this is a Smash Brothers Ultimate was actually a documentary. I love that this is part of my Nintendo
to take down
thesis.
about 10.
I'm just gonna play
Still
this
your
cutscene.
fear. It's now or never.
We'll win this. I know we will.
Did you see Kid Icarus there? That'd be neat if they actually acknowledge Kid Icarus in this new generation. There's Mario. You know whose point of view that was when Shulk looks backwards? Kirby. Link, gone. Samus, gone. Zelda, Mewtwo, gone. Sonic and Pikachu, gone. Bayonetta, gone. Gone. Pokemon, Bowser, gone. Captain Falcon, been gone. Lucario, gone. Splatoon, also gone. Falco, gone. Well, if you lose Palutena, you lose Pit and Dark Pit. Solid Snake, gone. Diddy Kong and Rosalina and Luma, gone. Duckman, gone. But then look at this hero. Look at this champion. Look at all this devastation. The whole universe, the entire universe was swallowed up by light. This is an actual documentary. But wait, what's that? By God, that's Kirby. Look at him. Witness his greatness. One survivor. One. So there you have it. That's why you stay long, Nintendo, folks. Not poor little Kirb. Kirb saved the day, Sam. He saved the day, Sam. You don't understand. He's a champion. He's not. He saves the day. He gets them all back. He gets everybody back. That's all I'm saying, man. Like, there is no Kirby hate here. And yeah, like, it's honestly it's a silly thing to say, but like, Nintendo makes me so happy so often that it's hard for me to be like, oh yeah, I should dump this stock. They made my favorite game ever. They like released F-Zero 99. Like, I fucking love that game so much. They still surprise and delight their fans. You know, like, they still have that in them. Look, I don't want Kirby to be alone either, but when he transcends time and space to save the world and the universe, I'll allow it. I'll allow it. Do I have to pull up the time that Kirby ate a semi-truck and saved the world? Because if we just want to turn this into me reacting to Kirby saving the universe, that sounds like a more fun stream, honestly. Anyway, yeah, I fucking love this company and this stock, and I'm still long. I have taken some off the table, not a material amount yet, but my long thesis is still intact. I'm not turning bearish on this company, and I just simply don't have enough information to make an intelligent decision on what to do with my investment. So I'm still holding. I will react to the information as it is announced, and then, you know, if by some miracle I get my hands on this thing, I will definitely be sharing that, my feelings on that. But I think this is a really unique transition for a console generation for Nintendo. Something we've never seen before. All of those great Switch games are going to live on Switch 2, and a lot of them are going to have better performance. So if you skipped out on Echoes of Wisdom, or you skipped out on Brothership, or God forbid, if you skipped out on Tears of the Kingdom, you might be able to play it with a better frame rate on Switch 2, or better textures. That's never been something that made me not appreciate the games, but I understand that performance is important for a lot of people. We don't know if it's OLED or not. It doesn't. I would not be surprised if it's not. I think they're doing their best to cut costs, and it's just easier to mass produce LCD than it is an OLED. If you're cutting corners, you know what I mean? Like, it seems obvious, though, Texacantina, that they would, you know, yeah, here's the Switch 2, and then 2 years later, here's the Switch 2 OLED edition, right? Like, they may go that route, where they're like, okay, now that we have sold out of our original, yeah, I know a lot of people are like, I don't want to buy one of these if it doesn't have an OLED screen. I don't blame you. I do find it odd that they would do that, considering that their best-selling Switch right now is the Switch OLED. So it would be weird for them not to do that. But I think that's what they're going to do, because Nintendo's like, what can we build and sell for $350 to $400? And that's, I think, what will inform some of the decisions in the hardware that people might not like. One being the chip that they're using, two being the screen that they're using. Yeah, if you play in handheld, I don't blame you. I don't really anymore. I kind of have moved to just playing on the couch, so it's not as big of a deal to me. But I do play my OLED in, the kickstand mode. I'll do that a lot, like during the day or whatever. So you're right. It's a disappointing thing, right? Where they're moving backwards. If that's true, we still don't know yet. So like I said, until I know for sure what's going on, I'm just not going to overreact, I guess. Especially when it comes to investing. Let's see. We talked about Tesla. We talked about Nintendo. Talked about Apple. We didn't really talk about Microsoft. We kind of glossed over them. They're in the crosshairs for this AI stuff. It's trading inside year. You had a RevStrat, a delayed RevStrat month to the downside. It still hasn't broken out of this like larger range that it's been in for the past few quarters. So yeah, you have inside quarter. So you could watch for a break down below 405.57 per share on Microsoft. That would be a sell signal. That would be valid through the end of March. When I say they're in the crosshairs, they've invested a lot of money in AI, and there's a lot of people are saying, well, this is gonna be a deal breaker for so many of Microsoft's offerings. And it's like, no, Microsoft actually makes money off of AI now, and they're not profitable, but they're generating revenue from AI. That's a lot more than most companies can say. But the stock did get slammed this week on earnings. Their earnings beat, but yeah, you have an outside week to the downside in Microsoft. So a break below 413.16 would be a sell signal next week. I don't know if Game Pass is doing well, man. If a Game Pass was doing so well, do you think Microsoft would break out the profit and loss of the Xbox division? Because all they tell us is the revenue. They tell us the revenue from gaming, and they combine hardware, software, and Game Pass into one segment. And they don't even tell us. They don't tell us profit margins. Yeah, they got a boost in subs, and the one-time boost that they got from the COD drop, like, you can see. You ask any dev that's on Game Pass how their revenue from Game Pass went after COD launched. It's been a disaster for game developers. It might be good for Microsoft. It's definitely good for consumers because it brings down the price of trying a game. But it's bad for game devs. Yeah, I think Game Pass is deflationary. I think Microsoft buying a bunch of developers has been deflationary as well. Yeah, they don't talk about churn. They don't talk about anything. They won't even tell us how many Xboxes they've sold. That's how bad that hardware system's doing. And that's why everything's an Xbox now, right? But yeah, you have some sell signals to pay attention to in Microsoft. We got some more companies reporting next week. You got like Google reporting, Nintendo reports. Some of the smaller tech companies are going to report. I don't know. You guys have any other stocks you want me to look at before I go? We can take a quick. I'm gonna keep my eye on this stock, Ubisoft. It had inside month, tried to RevStrat and failed. Dropped below 237. It's currently at 227. It's down on the year, but it's still trading inside of last year's range. It would have to break below $2.03 to break that, and that would be a sell signal. Kava. What is Kava? Kava Group. Is this like a coffee place? Am I right? I'm sorry. I don't know the stock, so I'm not gonna. I won't pontificate too much about it until I know what I'm talking about. Holy crap, it's expensive. So this is... What are they doing here? What does Kava do? Does anybody know? It's trading at 26 times book value, 232 times forward earnings, and 338 times trailing earnings. They bought Zoe's stores. It's the new Chipotle. $15 billion. Are they profitable? Oh, barely. Zoe's Kitchen. Oh, okay. Interesting. Let me see if I can find more info on this. Kava Grill is a Mediterranean fast casual restaurant with locations across the United States. Is owned by a publicly traded... Oh, so they bought Zoe's Kitchen back in 2018. Huh. So it's kind of like that medium tier fast casual stuff. Like, it's not fast food. Greek yogurt futures. I don't know about that. Actually, you know what? Before we go, because you got me on the food tip. I'm watching Tyson, man. Have you seen the bird flu deaths that are happening? The egg prices are going through the roof here in America. I think in Ohio we've lost more than 2 million egg hatching chickens in the last month. And when H5N1 shows up at your farm, the way that they treat chickens is so bad, especially in American agriculture, that yeah. Oh no, dude! It's jumping species. I think horses have gotten H5N1, but the way that they treat chickens, the way that hatcheries and they stack these chickens on top of each other, it's impossible for you not to lose your entire flock or whatever the hell they call it. Yeah, I just want to point out that H5N1 is spreading like wildfire right now. Ohio, New York, Massachusetts, Georgia, Texas. We're seeing it everywhere. And yeah, I do think Tyson might be short if things get worse. And this is not a fundamental call. This is a technical call. But that's a broadening formation. We're looking at a broadening formation here. It's a series of higher highs and a series of lower lows. When I look at the lower lows and I draw it out, this thing could drop to $20, and it's at 56 right now. So this is something that a group of chicken is called Congress. Oh, that's funny. No, this administration will not save us. They are limiting the CDC's communications about all this stuff. The CDC has pulled out of the WHO, the World Health Organization, and we're having to turn to independent websites that are tracking farm activity and tracking the death of chickens because the U.S. government has their head in the sand with regards to this. As someone who eats chicken, I'm worried. Like, it's like the only animal protein I eat, really. I was vegan for a while, and I reintroduced chicken into my life, like many years ago at this point. But yeah, I am kind of worried that like one of my main sources of protein is in trouble. So far, it's not like Tyson farms. It's more egg farms, but it's just a matter of time until we start to see more shortages appear. And just from a global or from a U.S. standpoint, the immigration policy, every farmer has come out and said this is going to hurt production of whatever crop you're talking about. So I think it's important to note that we have like an actual, we're just at risk of another pandemic, or at least an epidemic, or whatever you want to call it. Like there is a horrible virus spreading across our food chain right now. And that is not... I'm not bullish. I can't be. How can you be bullish after these last 2 weeks? If you live in America and you've seen everything that's happening right now, how can you be like, oh yeah, I want to own all these stocks? No. I'm just lucky that I own Nintendo mainly. Like, Nintendo is this weird little box where it's like, if they can ship the Switch 2 before these stupid tariffs cut their head off, maybe they have a chance. But for the most part, I wouldn't buy any stocks here. Like, any. Because there's so much uncertainty. And like, how can one have any confidence in this market with this leadership? So it's like, I always end my show saying, manage your risk. For the love of God, manage your risk right now. Look at every single position you own. Ask yourself these simple questions. Is this company going to be affected by H5N1? And is this company going to be affected by tariffs? And also, did they kiss Trump's ring or not? Because so many tech companies ponied up for the inauguration money. You saw Meta settled with Trump. They paid him $25 for banning him for the January 6th stuff. Conversely, you know who didn't unban Trump, other than Shacknews? Snapchat. Snapchat is the only social media company to not unban Donald Trump. So shout out to Snapchat. That's still in business. Man, that's a brutal looking chart. Outside month. So it'd be a buy signal above 1328 and a sell signal below 1040 for the month of February. I don't think they've reported earnings yet. I might be wrong. I don't really pay too much attention to it, but I saw that they're the only ones who have not unbanned Trump. And yeah, hey Lucci. Unfortunately, you are showing up right as I am wrapping up the show. I think that might be your go-to move. Unless you just like sit there and lurk and you know I'm about to end the show, so you come in and say hi. I don't know. Whatever you're doing, it's good to see you, man. And Sam's going to be up here next. I think you're playing Black Myth Wukong, Sam. Let the folks in the know, in the chat know, so they can be in the know. Okay. Well, welcome, Lucci. I'm happy to see you, buddy. Hope you had a good week. Lastly, the bane of my internet existence, Reddit. I like to just admit when I'm wrong here about stocks. I was wrong. I was wrong about Reddit's IPO. You should have bought it. The thing that changed when Reddit got preferential treatment in Google search results, that's what changed. I should have just bought the stock when they announced that. But yeah, that's a stock in an uptrend that's going higher. Like, I don't know what else to tell you. Keeps going. But I was wrong about Reddit. And it's because I was wrong about Reddit, I'm not going to tell you when to short it. I don't think it's now. But they seem to be benefiting from everything that's going on there. To the detriment of the internet. Like, we're not getting better search results as a result of this. It's actually made Google worse. But yeah, they're benefiting, so I just want to call that out. And then, yeah, before we go, we got Take-Two reporting next week. You had your outside month. So a sell signal below 177.35, a buy signal above 192.50. You know, we're going to start getting a drip drop of GTA 6 news, right? We're probably 3 to 6 months away from like that next information dump, and then the hype train's going to start going. So, but those are your price points to watch. And I just want to point out that they do report earnings next week. We will be covering that, and we will be broadcasting the conference call on this very Twitch channel. So hit the follow button and the notification bell if you don't want to miss that. You shouldn't, because I think it'll be a pretty great week of coverage from us. But yeah, I think that's going to do it for today's show. If anyone has any other stocks they want me to look at before I go, you can shout them out in the chat. But I think I'm going to wrap it up here. Sam's about to start streaming. Thank you, Sam, for letting me dip into your time slot here. I was just doing a lot today, you know. It's payroll day at Shacknews, so I was paying people and doing other stuff, behind the scenes things. The best day for you guys, I'm like the George Jetson meme. Let me see if I can find that. Let me see if I can get this up on the screen before we go. Can you not make tenor like bigger? I guess, yeah, there we go. There you go. It me. This meme. Is this not it? No. It's not. Sorry. I gotta switch scenes. There you go. That's me. That's what payday at Shacknews feels like for me. Hopefully you can see it now. Can you see it? I think it's... I know there's like a 40-minute tape delay between us and Russia, so maybe Lucy hasn't seen it yet. That's payday at Shacknews. Anyway, appreciate everyone who tuned in here. I just want to shout out, we have a website called bubbletron.com where you can play every day. It's a stock market slot machine almanac. It's sarcastic. It has voice now, right? So we got that going for us. Oh God, no. What have I done? I've made a terrible mistake. Wow, Tenor really is an awful website now. I don't like that website, the way it operates. You click on a GIF, it opens up the App Store. Don't like that. Yeah, anyway, let's check out Bubbletron real quick.
I am Bubbletron.
Hi, Bubbletron. On this day, Ham the chimpanzee became the first great ape launched into space in 1961. We salute Ham the chimpanzee. And then we got
Autonomous.
Gentrified.
Charge lemonade.
I like the idea of an autonomous weather app for dogs.
For dogs.
What do you guys think? I'm gonna hit the market.
Calculating.
Autonomous
I'm rich.
app for dogs.
Sweet. Yeah, that's Bubbletron. You guys should play it. It's great. It's not Bubble Trump. That's a whole other game, Lucci. But hey, thanks everybody for watching. I'm going to wrap up. Stay tuned if you're on Twitch right now. Sam is going to go live with Black Myth Wukong, his playthrough on Variety Hours at Shacknews. So thanks for watching, everybody. As always, manage your risk. These are incredibly uncertain times. If you're uncomfortable, if your investments or your trades are keeping you up at night, get out. Go liquid. Maybe you can go 100% to cash. Reassess your risk. Say, if you're taking too much risk, you're taking too much risk if it's keeping you up at night. I'm going to just say that. So if you're in that situation, reassess your risk. Look at your positions. Every single day, ask yourself, how will the Trump administration affect this company? How will tariffs affect this company? How is inflation affecting this company? And if you're comfortable owning it, stick to your guns. Because long-term investing is the only way that you're going to generate true wealth in this kind of environment. And they are stacking the deck for hedge funds, for rich people. So get on that playbook. Like, don't... Ignoring it in protest just means you won't make any money off of this. So it's like I said earlier, I own Tesla as a hedge for corruption, not because I like it. Like, when I decided to hold it, it was because the government is so corrupt that I think Tesla will probably go higher. And that's just a messed up situation for an investment thesis, but that's where we are. So like I said, please manage your risk. Understand what you're investing in. And that goes for crypto, that goes for housing, that goes for whatever you're spending your money on. Just understand what you're spending your money on. And everyone, just stay safe out there. Thanks for watching. Stay tuned. I'll see you next month on the 28th, which is, I don't know. When is the 28th? It will be another Friday. So I'll see you on Friday, February 28th for the next episode of Game Trainer. And thank you all for watching live. And if you're watching this on the VOD, thank you for watching it on the VOD. Have a good day, everybody. Or night, weekend. See ya. Bye-bye.